Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:59 a.m. Central Time, and I'm recording this in preparation for the market day of September the 9th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in the overnight. We had a very bullish day yesterday, and that indeed was followed with a bullish overnight. The S&P futures are up 19 points, or right at 1%. And the Russell were up about 0.75%. NASDAQ up a little over 1%, as is the Dow, also up over 1%. Crude oil down 1.44%. Euro down about 0.4%. Bonds up about 0.4%. And gold down just a fraction at the time of this cut. And overseas action, China up sharply 2.29%. Hong Kong up over 4%. Japan up 7.71%, and Germany up 1.78%, and United Kingdom up 2.09%. So some very, very impressive numbers coming in from overseas activity, and frankly more impressive than the numbers in the U.S. market, but still U.S. market up very, very solidly, especially considering just how bullish yesterday was. In terms of macroeconomic reports for today, you have in the United States a 10-year bond auction. If you're a bond trader, that's a yellow flag report for the general market, but if you're in the bonds, that could be more important to you. And that looks like about it for today on that front. In terms of current volatility conditions, obviously things are starting to ebb a little bit. Short-term VIX down to a 24.42, so down below 25. Skew still high though, 132.37. IV percentiles fell some yesterday, down a little bit below the midpoint. IV percentiles for the S&P 47, Russell 42, 45 for the NASDAQ, and 59 for the Dow. We did have a standard deviation move put in yesterday across all four broad market indices, but it was a positive one. It was a positive one standard deviation move across all four of those markets. In terms of our regular daily report, um, some ebbing off in some of the warnings and so forth, but we still remain a IBD market in correction. Accumulation distribution is a D for the S&P, and NASDAQ is still an E. Keep in mind, while we've had this bullish action, there's a lot of technical damage that has to be healed, and frankly, we're still in something of a kind of pennant pattern where we really been in the recent days within a small range after the huge multi-day drop at the beginning of last week. So while we've had some bullish action, we really haven't made any meaningful progress towards regaining those former highs, and even we have a swing high that's still in place that has not been broken for most recently. So bottom line on all this, this is still a very, very seriously damaged market, though most recent action in the last few days has been decidedly bullish. GMI index remains at 0 out of 6. That author does remain in cash. Primary market conditions actually strong bear, not neutral bull anymore. It degraded from there to strong bear. Stock charts, decision point scoreboard still the same, all down arrows across all time frames across each of the markets. Intermediate term market posture, we did have a change there for today. It has flipped to a first day weekly bullish. In terms of the breakdowns on that, you see the S&P 29.5, so this is a very, very weak bull. Dow 36.2, a little stronger, but still a weak bull. NASDAQ's actually the strongest of all of them at 47.9. If it goes over 50, that is just outright bullish. Russell also a very weak bull, much like the S&P at a 26.9. So on position sizing opinions, you do have on the portfolio position sizing opinion, that's calling for 0%, but on the volatility based, we have dropped to just over 24, which calls for a 50% position sizing opinion. So some divergence there between those two systems on position sizing. If this actually drops below 24, and if indeed this bullish action that's from the overnight holds through today, could be important in a couple ways technically. One being that it could challenge that prior swing high, and the second thing being that the position sizing opinion could actually increase to 75% based on the VIX. Overall hedge warning status, though, still remains at threshold level 3. That is our crash warning level. That means that the risk for significant downward pressure is present. Does not mean that it is a prediction of a significant down move, but the risk conditions are there, and you should make adjustments in your trading accordingly. Volatility based metrics, we do still have a market and decline warning. We still have this VIX over 18. We still have a very high distribution day count. We still have a VIX phase that has been increasing in the intermediate term trend, though in the short term has been decreasing. Skew remains over 130. Also, new highs, new lows yesterday from the New York Stock Exchange. Very benign, 82.52. Nothing really to get excited about or worried about there. In terms of the intermarket risk aversion indicators, all 5 now are flagging risk on. So that was some additional healing that we saw between yesterday and today. In the special opinions, no changes here. Option income strategies, VIX is still outside the acceptable window, not recommended for novice traders to be putting on new option income strategies. A significant risk for increased volatility and delta movement in this current market condition. So unless you are a very proficient trader at adjustments and the like, you might want to be very careful with the initiation of new option income strategies. Covered calls and put selling, we'll lump these together today. Basically not acceptable for new positions in this current market environment for novice traders. Aggressive traders consider scaling into positions using perhaps defined risk spreads, and also keeping those position sizes in the size in which you are willing to own that stock. So number of special conditions in there considering the current market conditions. In terms of sector market posture, with that big bullish action yesterday, you saw a lot of these flip into neutral on the short to intermediate term time frames. Consumer discretionary was perhaps in a relative manner the strongest. So something to kind of keep in mind there. But these could break down and turn all red again in a heartbeat if we were to have a negative day. So they're just not that strong in their readings as of yet. Percent change, obviously yesterday was huge in bullish action across all sectors. But notice who's down here at the bottom, energy. And we had a pretty poor overnight with crude oil. So it tends to be the first one to break down, and it tends to be the one that breaks down the worst. So continue to be very careful with any kind of bullish action on energy, and indeed you may look at these opportunities as perhaps bearish entry setups in that particular sector. Also note utilities was next. So obviously this, while utilities has had some improvement of lately, this interest rate decision that will come out next week could be very much on the mind of investors in that sector. At the top, healthcare. And healthcare has taken it a little bit on the chin of late, but with some very strong action yesterday. And that should be enough for today. As always, if you find what you're getting here is helpful to your trading, we greatly appreciate you retweeting us to your Twitter followers, to your StockTwit followers, liking us on YouTube, or subscribing to us on YouTube. Greatly appreciate that. If you've got direct feedback, just send us an email at support@falconglobaltraders.com. more information is available about what we do and how we actually apply these concepts to our daily trading at this website. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning for the market preview before the cash open. Thank you and good trading.